24th November 2023, Friday, MAO with Cal. Hedge funds, short sellers suffers more than $43 billion of losses. Man, this is really impactful. Jim Canos, all right, he actually closed his hedge fund right now. So what's happening, guys? Is it because the short sellers are really losing the battle to the bulls? Or is it because, right, when the bears are really dead, then the market will peak? Now, let's go into detail. Let's go. All right, before that, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Okay, so first of all, right, let's go into some details first. Now, the market is really bullish right now, as you can see. When the RBC, Bank of America, says that S&P will be heading to 5,000 in 2024. Now, this is really incredible. And there are 10 good reasons why they believe that this will happen. And of course, I did not prepare this for you. I'll do it in the next video. But the more important thing is this right now, you can see that the fear and greed index on the CNN index is at the greed level. We are not at the extreme level yet, so which means that there could be a little bit more upside. And that's the reason why I feel that it's time to buy some VIX just on the safe side. What do you think? Let me know in the comment box, yeah? Okay, so first of all, right, the magnificent 2%, that is weighing on S&P is really the one. Apple and Microsoft, look at it, the two of them combined is a 13.9% weightage of the entire S&P 500 index. This is incredible. Energy, real estate, utilities, material sectors combined is only 11.9. So which means that basically so 12% of the whole thing is movement. There are so many counters that's doing all this sector is right, can't even be near to Apple and Microsoft. And in fact, metal and mining is only carrying 0.2%. So what's happening right now? The market is buying that there could be a rally very soon, because based on 1970s to date, right, the market, like the Nifty 50 stock bubble that went all the way up before the oil embargo. Then, of course, we have the same tech bubble that we reached the 2008 peak, right? So this commodities to equity ratio seemingly telling us that there could be further upside to go. But that is for commodities. So the question is this, will commodity prices going up? Yeah, definitely. If the Federal Reserve really start to pause interest rate, the dollar will fall, which we are seeing right now. And if the dollar fall, what we'll see in the commodity prices will go up. And that is where, in my opinion itself, is exactly following the plan that it's supposed to do. So the reason why I feel that, right, there could be a run on commodities and including equities could be based on this. So now the thing is this, the global banks are seemingly loosening right now. So apparently you can see that the global net central bank tightening versus loosening, they are loosening right now. And this is really it's a very important thing, because we have seen it before. When they loosen, right, the stock market goes up. But again, I want to remind you, the years that it came down, right, are the years where the stock market actually fell. So this is another very interesting part. So you look at it right now, right? Oh, there's something on the technical side. Just give me one sec to reply to solve this technical issue. Just give me a moment. Okay, where are we now? Okay, here we go. All right, apology on that. Give me some of the PowerPoint. So a total rate action from 81 central banks, okay, across the globe, right? Right, they are actually basically showing that they are cutting interest rate right now. Cutting, yes, incredible. They are actually cutting. So if that is the case, right, that means that the market either wants to want to push the market even higher, or is it because they know that something is breaking and there's something they can't do? That's something that we need to take note. So from the Fed meeting shows that the unity on cautious approach to the future rate hike is still there. That means that the Federal Reserve still think that there should be rate hikes coming in, but based on the Fed fund rates itself from the market, it seems that they are not looking at any rate hike from now till March. And in fact itself, they're assuming from April 2024 there will be rate cut. So the question is, who shall we believe? So because of all that, right, that's the reason why the hedge funds now are losing as much as $43 billion of losses in the market rally recently. And of course, famous short seller Jim Canos has to close his main hedge funds. Now, I haven't read why he closed it, but with the market recovering like this right now, it makes lots of sense. And of course, some hedge fund like this Cube denies making a £670 million short sale on HSBC, because HSBC also went up. So the question is, wow, is it the time to buy, or is it time to take profit? Now, this is a very big question here. So let's look into the article here, all right? So hedge fund short sellers losses hit $43 billion in the market rally. So what are the main reasons? Let's go into detail. All right, so first of all, they bet on the US and European stock market, which of course the market had rallied quite a fair bit recently. And the main reason, because right now they believe that the cycle of rates is going to basically is over. They believe that right now the rate cuts are coming very soon, and that should stimulate the economy. And the weaker than expected US consumer price inflation data, which I saw recently, has confirmed that. So in fact, they believe that by exercising rate cuts right now, or soon to be, it will actually be helpful for inflation, because that means that they know that inflation is coming down. So whatever they did previously makes sense. And then that basically brings inflation down. So to them, it's all right. Since inflation is coming down, they can exercise the rate cuts. But my question is this: if you do a rate cut right now, right, the dollar will go down, right, in value, and then that will bring up commodity prices up again. And wouldn't that will cause inflation? So this is something that I can't really understand. So the next thing is this, right? We all know that the main reason why the market is going up is because there are a lot of negative bets or short bets on the market, which basically was squeezed by some buyers, and that pumped the price up very fast. And really, it kills off all the whole year performance by all the hedge fund in it. So right now, right, from the S3 data, basically it's all right. Some companies that is totally whack in terms of fundamental can still go up. In fact, there was some fund that basically could have lost $240 million because of recent recovery. I'll show you a chart later. So the main things right now is that, right, even Barclays, most shorted stock in Euro basket, has climbed 9.9% over the past 3 weeks, leaving it on track the biggest monthly gain in at least 10 years. My goodness, that means that a lot of short sellers got fried big time, right? Isn't it? So the question is right now, with all this thing, all the hedge fund being hit, is end of the day, is all right. Is it because someone is actually the invisible hand basically killing off all the short sellers? So the question is, if the short sellers are out and the buyers are in, the question is now is that who is going to push the market higher? First question. Second question, if everyone is buying, then who is selling? Think about it. So based on this right now from the Goldman Sachs very important short index, Barclays, most of the stock index, they are all have rebounded quite strongly from the bottom. So that's the reason why it's all right. You can see from here that the market took about probably a few months to drop, and the market recovered in just half of the time. So that basically caused a lot of problems. And we all know that the algorithms has been one of the main reasons why the market can fly up so fast and stuff like that. So with all these things, all right, even the CTAs has a very interesting report. The CTAs, right, are down 3.7% for this month. Interesting. So usually CTA is a very good indication. And the moment now they are net short both equity and bonds. So the question is, where are they? Are they in the right place, or they know something that we don't know? So think about this. So look at this counter right now, Carnival, this corporation. You can see that why the market basically rebounded so strongly, because the stock have been coming down all the way. Let me just change my color. Okay, change my color to here. It was at basically $19 and it came down all the way to $11. I'm pretty sure the huge volume right here that basically instigated all the selling. But when the market, right, with no much big volume, pump up all the way to $14, that basically is rebounded quite a fair bit. So if a lot of people are shorting the counter somewhere around here, now they are losing money, right? So this is why I feel that it's a short squeeze than basically a buying on interest, because this company has not been doing well for a long, long time. So with that, right, the question is based on the seasonal pattern, the Russell 2000 would be rebounding soon. Well, based on what we are seeing right now, there is a possibility by December to January, based on the seasonal pattern since 1979 until to date, right? Usually we have a stock rally in the first few months for the Russell 2000. So if that is the potential upside here, is it now is a good time to buy? Well, it seems to be if you look at it from that point. But if you ask me right now, right, I'll look at the chart here, and I kind of want you to be careful. Well, because of this, you can see that this is the trajectory of the Dow, and this is the point B, point A is somewhere around here, and now we are at point C. And in terms of the RSI, we are somewhere near the same common point. Hence, therefore, I think it's a good time to take some profit. That's the reason why I've been posting my video. I said that, guys, you make some money on the long side too. Let's take some profit from the market. And you can see the NASDAQ, right? Although we have a very strong breakout above 16,000, but it came as a reversal hammer. Hence, therefore, I think that the NASDAQ could pull back down to 15,300 in the near term. And of course, with the RSI, we also have the same thing. But in this of the trajectory itself is kind of bullish because the high gets higher. Usually that means the market can go higher. So if the market NASDAQ do pull back to 15,300, this could be a very good time to buy. And of course, with the moving average is there, why not, right? So I have a bit of a different view between the Dow and the NASDAQ. The Dow, I think, is time to take profit. For the NASDAQ itself, right? If it comes down, we can try to buy some, yeah? And the thing is this, the US dollar index. Now, I've been calling to sell the dollar index at 107. So it went down to 106. I told you that if the market break 106, there will be selling, and truth be told, it happened. And that's the reason why we asked you to buy silver, buy gold, because of that. Now, but the thing is this, the dollar right now is supported at the moving average, and this is where I get a bit concerned. Because the last time we see something like this, right, the dollar actually shoot up. So the thing is, if the dollar really will go up, then that will pressure back, and then this may cause the equity market to fall. But of course, if the dollar continue to slide further, then inflation or the commodity prices will go up, right? That's why to buy gold. So that's why I'm actually looking to short the equities and long gold at the same time. But we do see a very interesting relationship whereby the equity market and gold seemingly at the moment now is moving in tandem. So that's something very interesting. So now if I put this together, dollar index and gold together, you will actually see that, yeah, the dollar fell, the gold went up. But of course, the momentum of gold going up is not the same speed as the dollar coming down. So I just feel that, right, maybe the market is still trying to buy some gold, but they don't want it to go too high. But my target for gold is still the same, 2016 in the near term. All right, 2016. So traders now, with the thing at the bottom here itself, right, we may actually see a little bit of resistance on the dollar. But if the dollar continues to slide, then of course, voila, there'll be good money for all of us. So that's the reason why I said, right, by April 2024, we should see the gold hitting 2218. And of course, I did say a few days ago, it's time to take some profit. The market is bullish, but it's good to take profit because slightly chance Jerome Powell and friends will pause interest rate for some time and then cut it by probably next year if things go bad. All right. So, but then again, I cannot deny this. The LEI, it's a US leading indicators, has tumbled for the 19th straight month, the worst streak since Lehman Brothers. So what is happening right now? LEI is a very important indicator and been dropping and dropping for the 19th month. So the question, if it's so bad, things is so not good, why the stock market is going high? Because they say because that is because of inflation coming down. So there's no need to worry on that. Just don't worry. But again, if you look into history, every time when the LEI goes down to silicon level, we can see that the next moment we see recession. Yes, recession. So the thing is this right now, on average out basis, we are actually now at the recession period. But of course, again, you won't see this until probably by April 2024, unless something break like Lehman Brothers, something break like 9/11, something break like 1987 stock market crisis. You need something very big for this to actually happen. All right. So that is how I see this right now. And I want you to be careful. And because of that as well, right, I think that the VIX itself at the moment looks very nice to buy. So VIX is back to 12.85. And based on the bottoming out at the RSI, I think we can try it. And because the fear and greed index right now is near to the 75 region, usually that is a time for us to take some buy on the VIX. So the last time we saw this was in early 2022. Let me just clear my screen a little bit so I can show you better. Just give me a moment. Okay, just give me about 5 seconds. 5, 4, 3, 2, 1. My screen is not updating yet. Okay, there's some issue right now on my side on technical. All right, so, oh, it's done. Okay, let me show it to you now. So you can see that, right? Okay, over here. Okay, let me get my screen here. Thanks. All right, so you can see that in 2022, you can see the VIX shoot up all the way from 16 all the way to 40. Now, what was that? Because the VIX itself was, I mean, the fear and greed index was at a high level before coming down all the way. And recently in October, when it bottomed out, right, that was where the VIX peaked at about 23, coming down all the way. So with that understanding here, I hope that you will take my advice, do some trading on the VIX, and then do some on the gold side if you want to. So like, subscribe, and share my video. This is Kel signing off. Take care and have a great day. Bye-bye.